Hello, everyone. Welcome back to the George Boo Show. Today, we have reached an exciting milestone: 30 episodes, and almost like a year of making the podcast. Like we're really glad to make 30 episodes, and then real thanks to like all the listeners out there who's been listening to the show, supporting the show. And also thanks a lot to Matt and Soham, who's been our guest host and helping the podcast always. Soham will be joining us in just a second. And Matt, I know there's a lot of things. Well, not a lot of things happening in crypto world since we last spoke. So, what are the things that people should know about Web3 and Bitcoin?
Yeah, absolutely. Well, let's see. Not in crypto in general. Like the crypto industry, like to be honest, it's been pretty quiet. Over the last couple of months, there's been no new FTXs. There's been no new Celsiuses coming down. So it's been pretty quiet in general. There's a couple things that have been happening lately. We've got if you guys know True USD, it's one of the larger stable coins. They recently minted. They became the fifth largest when they minted $130 million in a week, which is a little bit crazy to do. And so there's kind of questions of whether how legitimate that is. Is the money actually stored there? They claim to have some new proof of reserves from Chainlink in place, but of course, proof of reserves does not mean, does not account for proof of liabilities at the end of the day. So that's interesting, but not that crazy. I guess the more interesting thing actually is there's some folks that are claiming that Binance kind of did similar actions to FTX back in the day. They used customer funds essentially to kind of hedge some of their bets. Apparently $1.8 billion were on the line. So I don't know if that's actually the case because it's folks looking on chain and kind of speculating. But if that, I wouldn't be surprised because everyone and their dog during the bull market was essentially just sitting there and kind of making directional bets, and a lot of them were wrong. Maybe Binance was right because they bet on BNB and BNB didn't crash. So yeah, that's about it, George.
Yeah, and for our listeners, I just want to clarify this report. So this is originally from Forbes, and then we are copying it from Business Insider. It's basically saying that Binance used customer funds for its own purposes in a move similar to FTX. So it says that Binance have transferred over $1.8 billion in stablecoins collateral to a hedge fund. So apparently, like Matt, I think that's the context. How reliable do you think those data are to speaking if Binance did something wrong?
Well, it really depends. If you look at Ethereum or EVM compatible chains, so that would be Ethereum or Binance chain, you can generally look at the smart contract and say, hey, here's where the funds are and here's what they're using them for. But in general as well, I'm not sure like what internal management or database systems Binance has set up for kind of managing all these things. I mean, at the end of the day, I recommend for people use an exchange like you use, use a bathroom. You get in and you get out, right? And so I don't know, to be honest. I would have to look at the on-chain data and see what they're looking at to determine if that's really the case. But at the end of the day, I wouldn't be surprised if they were using customer funds for a directional bet. That wouldn't be surprising from what we've seen in the entire past year.
Question, I guess, twofold is that, first of all, is it illegal for them to use customer funds for their own needs, even though it has not created theoretically a problem or like a catastrophe yet? It seems like they've swept under the rug and it's not creating any like real damages to customers. So is that like, Matt, do you think that had like on a legal perspective, is that bad for Binance? Because it's currently undergoing a few other investigations right now.
Yeah, well, it really depends on the jurisdiction that they're in, right? So, as an example, FTX specified in their terms of service that all assets were held one-to-one and that they were not using customer assets for directional bets. And so that's generally the golden standard, especially in the United States, right? So you've got Binance US, right? That's supposed to be following regulation that says that all assets are backed one-to-one. And FTX US claimed that was the case as well, even when FTX International went down, but that was not the case either. And so, the speculation is that Coinbase is likely following this practice of having assets backed one-to-one. depending on now, but now there's other examples though where this is not the case. Like Celsius, for example, in their terms of service, they specified that the creditors or the folks who invested in Celsius would actually be the last ones to be repaid. And so that was specified in their terms of service. So it would really depend on what the terms of service are of Binance and which jurisdiction we're looking at. I believe that Binance is based in Malta, but Binance US obviously has to follow US jurisdiction and law. And so if they're not following, assets being backed one-to-one and they're making directional bets with assets that have been stored in Binance US, then that's likely illegal and likely cause for investigation. Now, obviously, the long-term solution for most folks is don't hold your assets for such a long period of time in Binance. Hold it in your own cold storage in your own wallet, and be prudent of using it. Just get into the exchange and get out. But if that is the case, that they're not holding assets one-to-one and they are kind of doing these types of things, then maybe there's going to be an investigation from kind of U.S. authorities on that.
And I think one interesting point that this also touched on is like the privacy in blockchain or the privacy in like Web3, because obviously every wallet, and Matt, you can give our listeners a little bit of context as well. But from my understanding is that every wallet has like a unique address in Ethereum, and when you're transferring from one address to another, it essentially there's like a spy on the internet that everyone can see who you transferred, where and how. So can you give us a little bit of context on that?
Yeah, that's a great question. So this brings up a very key difference between Bitcoin and Ethereum. So on Ethereum, the kind of status quo and the standard is to reuse addresses. So once you get one specific address, you'll go and you'll use that for all of your transactions on chain. So whether you're taking out a loan, whether you're trading, it'll all be done with the same address. You can switch it between different addresses, but that isn't the default functionality of each wallet. One of the really great advantages of Bitcoin actually is that the standard wallet practice is to generate a new address for every single transaction. And so what's really great about that is if you're trying to actually go and do what's called chain analysis, which is just blockchain analysis, and trying to find out, which funds are associated with which person, it's much more difficult to do in Bitcoin because you have to kind of guess which addresses and which transactions are associated with each other, whereas it's very clear in Ethereum. The other thing in Ethereum too is when you look at the blockchain data, generally all these smart contracts are all kind of publicly verifiable on chain. And so you can see exactly what it's being used for, and you can see the exact function that's being called. And so it's very, very difficult to kind of retain any type of privacy. Very clear that you took out a loan here or did a swap over here. Whereas in Bitcoin, that data isn't included in the actual, like on chain, for example. Like, so say if I do an options contract or a futures contract, it looks actually no different than a Lightning channel payment, which improves, your privacy dramatically.
And I think the issue with that is that actually fixable, Matt? Because as you said, there's a lot of patches to Ethereum from time to time, and the patches usually get approved by the guy at the top. So do you think the privacy issue is an issue in the community? And is there any like timelines people are thinking, okay, maybe we should fix it down the line?
Well, they've been talking about so what is privacy? Privacy is a huge can of worms and a rabbit hole that you can go down because there's a range of privacy for everything, right? Some people consider privacy being living off the grid and having a tinfoil hat, and other people it's like, okay, well, I don't want everyone at my workplace to be able to see what transactions I'm making, right? And so obviously we're talking about just kind of privacy for your basic transactions, which we kind of have in legacy system already. And so there's been some developments to try to develop like say, I guess ZK rollups, so zero knowledge proofs, and creating rollups using that on Ethereum that kind of obfuscate some of the transactions, or different protocols that obfuscate transaction data. But generally, those are extremely expensive on chain because of the gas fees. And so I think the other problem with Ethereum too is that it has just the nature of how it was built. So it has what is called an account-based model, and Bitcoin has a UTXO-based model. So when you have an account-based model, the blockchain itself keeps track of what your balance is, essentially. So how much Ethereum do I have? How much Ethereum do you have, George? How much USDC do you have? Right, and so it keeps track of that, and that is all based on your address. So unless Ethereum is going to make a massive, hard fork to change to a completely different model, which would probably break all of their smart contract functionality, I don't think we're going to see any privacy improvements anytime soon. Most likely, it might be at like second layers or with specific protocols that they improve it. But for now, I just think at the base layer, you're just going to have so much better privacy on
That's
on
very
Bitcoin.
interesting. And I
Yeah.
know Soham has been with us for many, many minutes. So how's it going there, Soham?
Yeah, it's going pretty good. So
All
I just
good,
came
all
back
good.
from a meeting.
I think also like our next topic is very interesting, Soham. I can use your insights. So this is news I've been keeping track of. So yesterday, Goldman Sachs just had their second investor day, and a large pressure is actually mounting on their consumer side businesses. So as you guys may or may not know, Goldman Sachs has two sides of consumer businesses. One side is called Marcus, which is actually the first name of Goldman's founder. And Marcus is a fintech platform that essentially gives people credit, give them a high yield savings account, and more things. And they're also the issuer for Apple Card, Apple Credit Card. The other side, there's a Green Sky, which is doing consumer financing. And apparently those two businesses have been very unprofitable since Goldman Sachs started it. And I think yesterday the Wall Street Journal reported that Goldman's management is considering significantly winding down those two projects, potentially a sale. And that has been very vague. And yesterday, another article on Bloomberg says that Goldman Sachs is trying to play boring in their investor day, focusing on boring businesses like asset management, wealth management, because they have a stability of minting fees and stuff. We're heavily underplaying the side of the consumer side businesses. So Soham, I know you know Goldman Sachs pretty well from by working in finance. So what's your reaction for their investor day in general?
Yeah, no, I think the fact that their like consumer side of their business hasn't been doing as well is more so not just like a Goldman specific situation, but like for the past couple of years, the consumer side of like any kind of banks hasn't been good because like in 2020, 2021, it was a low interest rate environment. And now that like we've really increased interest rates, like that parity is really hard for a consumer. Because like on the consumer side, the way you make your money is through stuff like mortgages, lending out line of credits to retail investors, like people with like smaller amounts, right? And like the other side of banks is usually like you said, like Goldman Sachs, like bread and butter is like the investment banking arm, the sales and trading arm, the equity research arm, things like that. Those things kind of have like a lot more like built-in like security. That's why they're trying to like focus their investors back more on that side. Versus right now, because of like the pressures of like the interest rates itself have increased so much, it becomes harder for more people to take on enough mortgages, things like that, for that to do good. And then previously, between 2020 and 2021, because of how low the interest rates were, it just was not a very profitable time in terms of margins for like the consumer side versus like on the other side when it came to M&A, like that was going bonkers, right? Like with low interest rates, everyone wants to buy some kind of company, everyone wants to take that kind of risk. Versus like when the consumers didn't, if they don't have to pay interest on it, then the bank isn't making money on that side of things.
My read is that Goldman wants to build like a diversified business, right? I think that's what the new CEO David Solomon has been trying to do since he took power. And I think part of it is like when M&A is not really working in 2022 and this year, their trading profits actually shot up. So Soham, this is clearly something like Wall Street has been tracking. Everyone's been tracking. The Goldman is essentially like the representation of Wall Street. So how has the last 2 years been for Goldman, and what's your take about the direction it's going?
Yeah, I think overall, like the direction for Goldman, like let's say like today onwards into the future, I think they're gonna start like not going as heavy on the consumer side, just because it's becoming kind of hard to compete with like all like smaller fintech companies also coming into the space. You have like really new like niche startups like SoFi that have gotten like a lot of investors, and then like SoFi has like their whole stadium, right, for like the NFL. Like that space is becoming a lot more just much more competitive versus like in the actual like on the other side, like not commercial, on the corporate side, they're number one. So I think like Dave Salm, as much as he wants to diversify the business, they're starting to take that step back and going back into what their like brand image is really good for. Like Goldman Sachs brand itself, probably one of the most valuable brands in the entire world for like that part of it, right? So because consumers didn't, Goldman thought more consumers were going to come into Goldman just because their brand name
Yep.
on the other side, but consumers didn't come in. Like, like there was just too much competition, and like with more competition, you also have to get lower margins because you have to give like better rates, stuff like that. And overall, I just don't think their mortgage business was nearly as profitable as like they thought it was going to be going forward. And I think now they're going to start taking like a step back a little bit. I think it's still going to be there, but it'll be something that 5, 10 years down might be a bit more of like a legacy thing than like there's something they're going to really try to focus a lot of
Yeah,
investors
and I think
on.
Matt, you probably have more insights on this. Yesterday, I was actually watching a CNBC article about it. It says that an average deposit from a Goldman Sachs asset management customer is actually $25 million, whereas on Marcus, the average customer deposit is just over $1,000. So there's huge discrepancies between what they're trying to do between those two businesses. So, like Matt, what's your thoughts as like maybe a fintech Web3 founder listening to this news about their tanking fintech operations?
I mean, well, are you trying to suggest here, George, that we're seeing a shift, that we're seeing a shift towards more I guess Bitcoin related assets? I don't know. I think it's interesting because I think it shows that what is the use case for banks in the first place? The use case for banks is simply to be able to provide a service to customers and essentially to hold their assets, or provide various financial or banking services to them. And I think, moving forward, as we see more and more folks, start to adopt, potentially alternatives to what exists in the traditional system, there's going to be less and less kind of bottom line for them to be able to pull in. And so obviously today, the majority of people are still using banking services, are still using bank accounts. But, what does that look like in 10, 20 years? I don't know, as we see more, Gen Z and folks that start to rely entirely on having, say, just holding Bitcoin themselves instead of having a bank account. Does that hurt their bottom line
Yeah,
in the
and I
long
think that's a
term? I
good
don't
point
know.
about maybe that's also part of the reason why they had a transition towards consumer, because apparently in 10, 20 years, the wealthiest people in the world is going to be averaged age. It's going to be very different. And what kind of asset management are they going to do? Are they going to still rely on traditional legacy asset managers like Goldman, or are they going to try to do something of their own or pick newer managers? Like Matt, I mean, from your experience, how are people managing their wealth when they're like still at a younger age, in their 20s and their 30s? Are they just like thinking of doing everything by themselves, or are you seeing a newer trend?
Yeah, I mean, to be honest, I think I'm in probably maybe a different circle than most folks. Because obviously the folks that are in, kind of my circle are, for the most part, they're looking to, they have a certain amount of capital that's allocated to crypto and hopefully mostly Bitcoin. And they've got some in stocks, and potentially mutual funds. They're and maybe a little bit in the bank, but they're not holding the majority of their capital in cash. But I think as there's a high potential here. There's lots of folks that maybe even got into Bitcoin early on that now the majority of their portfolio is now Bitcoin, and so as time goes on, does that continue to increase? But obviously, that's my circles. I guess, what trend have you been seeing in your circles,
I think
George?
relying. I think in my circle, people are definitely scaling back about their only investing. I think if you look at 2020 and 21, the Robinhood, the meme stock phenomenon, I think we're seeing a lot less than that. People are actually preferring safer assets, for my opinion. So people are actually going back to the banks that provides 3%, 4% yield, and they're okay. Geez, it's not that bad. And companies that I know, they're actually buying GIC notes, right, which is essentially the Canadian version of the U.S. Treasury bills. And I just think people are becoming a lot more conservative. I think in terms of like purchasing Bitcoin, my circle, I haven't seen anyone doing that in the past couple months, primarily just because of volatility. But although if you look at an investment perspective, I definitely think it's still a very interesting asset to look into. But not in terms of like diversifying. But for my friends who are more of them are on the startup side and finance side, right? So, Soham, what are you seeing from your circle?
Yeah. Yeah, from like my friends, I guess like I'm still like a little more on traditional. Like a lot of my friends kind of like shift towards debt, like just because like the yield there is a lot higher now, and it's like a lot lower risk. But overall, like in terms of like where like consumers are putting their money, I think like our generation and like younger kids, no one really needs like a physical bank anymore, right? And like so, a lot of this stuff now is just going to be through your app, stuff like that. So whatever like consumers want to invest in, they can kind of make that decision like right away. There's no really meeting with like people, stuff like that. Like Matt like talked about like mutual funds. Like people stop putting money in mutual funds now. They do ETFs, which you can like trade within seconds, sell within seconds. Like everything's kind of become on that one public market on your one phone, and so like that's kind of like I think changed the entire game. And I feel like overall like asset management is going to become a much lower and lower part of it versus unless you're like one of those big companies like Vanguard or something like that, where you just own so much and you just have the ETFs, like everyone's kind of putting the money into it. So
Yeah.
I think you brought up a really good point, actually, Soham, which is this idea that essentially the user experience or the kind of this concept of people aren't using index funds because it's people are kind of flocking more towards whatever is just in an app and is easy to access using tools like Wealthsimple and other things. Like there's this kind of concept that whatever is the easiest user experience is most likely to be the tool that folks use. And I think with that in mind, it's quite bizarre actually that the majority of banks don't even have a simple API system in place to be able to access the underlying data. There you have companies like Plaid. I believe that's pronounced correctly. That essentially take your login details and then scrape your entire bank account in order to be able to get access to that data or to be able to use more apps that kind of manage your life. So I wonder if how long is it going to take for these banks to wake up and start adding simple APIs for developers to be able to come in and just
And
build
let's not
tools on
forget
top.
Plaid is
I think
let's not forget Plaid is bought by Visa, which is like the legacy player. So essentially, Plaid is going back straight to where the banks are. And yeah, Soham, you're saying?
no, I was just gonna say I think the problem is like with all these like legacy companies, they're just so big. Like you just can't do that within like like a couple of weeks. Like a lot of like smaller startups, yeah, the CEO can talk with like the main engineer on this within like a 5-10 minute call. Within like these big companies, it becomes like weeks just to have like that conversation where the engineer meets with like that CEO and stuff like that. So it's like it's something I just don't think the legacy companies have the speed to be able to keep up with versus how fast some of the other like companies can
But
kind of
Maddie,
deliver.
I mean, I think that's fair, but we're also talking in the form of like years, right? So it's 2023, and you still don't have an API system, and so
Yeah.
I don't know. I think maybe it's just not a priority because they probably want to keep that data. To
I think
themselves.
if you look at it this way, Matt, if you look at like the US and Canadian system, it's actually very different. Canada, you have like maybe 5 major banks that's just like in play. But in US, you have like hundreds of banks. You can have regional banks, all that, right? I think that's probably explains why US is a lot more like prominent in terms of the fintech progress and why people are trying it. Because if you think about it, in the US, when banks still do compete. They do compete on rates, they compete on savings rates, and they compete on many other features. And the lesser prominent banks go out of business, and that's why companies like Synctera.com, which we have invited onto the show a couple episodes back, they are doing something by leveraging the relationships with the banks, the regional banks. The banks are not getting the national recognition by partnering up with them, and then in turn using them to provide services for fintech companies, right? Because let's be honest, like fintech companies cannot innovate financially without the help of traditional legacy banks. So from what I'm seeing the reluctance in Canada in which the banks are willing to do something like an API, whereas in the US, the big banks are kind of the same, but you have a lot more innovation happening on the mid to lower level of the banks. That's what I think.
I see what you're saying. So you're basically saying the fact that there's more of a monopoly in Canada discourages innovation, which I think is true in many industries, in banks as well as we hadn't seen like low cost airlines until just recently here in Canada, and so maybe there's too many monopolies that are kind of preventing or duopolies that are kind of preventing innovation.
Yeah, Soham, what's your thoughts on this?
I definitely agree. Like, Canada's kind of got to the point where you have a lot of like, duopolies and oligopolies within like, even like in that telecom space, you have like a couple of big players, like air travel and then even the banks. But I think one of the bigger other parts is too, like, at this point, yeah, like George, you hit the point where you're talking about, yeah, fintech companies, they can't do this without the banks because the banks just own so many of the customers. Like within the five big banks, they kind of own everybody and they have all that data. And like the only way fintech companies can do it is by leveraging that data
Mm-hmm.
within that to then be able to like make like their own APIs that kind of like, help like show you and give you that better experience. And then I think that like reliance on each other is just going to get kind of messy in the coming years once like the banks start wanting to do that themselves, and they're probably not going to be able to give as good of a
Yeah,
product.
I
So
think
we'll
the
see what
big banks
happens
are
with that.
reluctant, right? And so if you see how the traditional fintech works, is that if you're going to a new bank, like Michael, who we interviewed on a show a couple of episodes ago, he's basically saying that the customer funds is still stored within those big banks. And I think here in Canada, the funds are stored actually in a U.S. bank. And that just speaks to you how people are so afraid of like working with the banks locally here, which is a very sad thing. But like fintech still need banks in order to operate because the money is still stored in those banks' accounts. Apparently, I think. So yeah, Matt, what are you seeing like the disruption from maybe like let's say Web3 or Bitcoin? Like how's that changing how people view money, right? Because like we saw BlockFi, we saw FTX, the destruction of asset management yield accounts in the blockchain world. So what are we seeing now? Like, are there anything that's like innovative enough that people are actually trusting putting their money in?
Well, I think we're seeing people pull back a little bit and say, hey, there was lots of people, to be honest, we're really in a bear market right now. So there was lots of people during kind of the height of the FTX collapses that kind of said, hey, this isn't really a great spot to be in. I had lots of crypto or Bitcoin, and now I'm in a spot where I've lost a significant percentage of that to FTX or to BlockFi or to Celsius. And so, but at the same time, as that was occurring, um, people were phoning up the folks at Unchained Capital or Casa, who provide services to allow for people to hold their assets in cold storage and be able to secure it effectively. Their phones were going off the hook, and so that's a really great thing to see because it means that people learned a lesson. They learned a lesson which says, hey, don't put all of your funds on an exchange. You should hold a significant percentage of that yourself. And so I think it's just a cycle and a kind of amount of pain that needs to occur. People aren't going to learn
Yep.
until they lose their money. And so we're seeing those cycles kind of repeat every time. And as we go through the bull and bear cycles of Bitcoin, we're going to continuously see folks learn that, hey, yes, I need to custody my assets myself. I need to hold them in cold storage. I need to figure out how to do that. And that's going to reduce my risks and my exposures
Yeah.
substantially. So
And have you seen any
yeah,
debate, Matt? I'm just been thinking about this. Have you seen any debates about cold storage? It's like if you put money into cold storage, or if you encourage people to put money into cold storage, does that actually discourage folks who are using the ecosystem or connecting from other crypto services and using other services instead of just like treating it as like a store value of wealth? What's your take on that, Matt?
yeah. Well, I think like there's always a case for having the majority of your assets in cold storage, but that doesn't mean you shouldn't use your assets for other things. And that kind of ties into what we're building because right now, what like if you take Bitcoin for example, what is the alternative to having your assets in cold storage? Well, it's really having them on an exchange. It's putting them on some type of platform and someone else taking custody of them. You have a bit of a different ecosystem that exists in Ethereum. You have an asset like Ethereum, obviously, that isn't as sound as, say, Bitcoin, for example, but you have more of a DeFi ecosystem that's been built out. And that is more akin to cold storage than obviously having it on an exchange, but at the same time, you're being exposed to smart contract risk. So one of the things that we're working on, obviously, at Atomic Finance is kind of bridging that gap for Bitcoin, is allowing for folks to be able to do more with their Bitcoin, so it not just being a pet rock, but allowing for them to be able to get access to financial tools for Bitcoin that retain as many of the properties of Bitcoin as possible. And so, that's what we're working on with the Atomic Finance app to allow folks to, make returns on their Bitcoin without having to actually, put it on an exchange where they have to put full custody of their Bitcoin away. So I think we're going to see more and more of these tools come out in the coming years for sure.
And so, what's your thought about this? Um,
Yeah, I think when it comes to like Web3 and then like even Bitcoin, like what Matt said, like instead of holding it as a pet rock, I think there has to become at one point where like there isn't Bitcoin isn't the third party middleman anymore, but instead you're paying with Bitcoin, you're paying with whatever cryptocurrency for the actual good or service that you really want. I think like that's both instead of this being like an investment and then like where the volatility hits, everything like that. Once like that kind of like starts happening where more and more people become confident with like, like these cryptocurrencies to be like the main form of as a legitimate currency, like viable for that use case, that's where we can kind of see like a lot more disruption on like kind of like all ends. But I think until then, like I'm I'm not really sure where it's gonna go.
Well, I think you brought up a really good point, which is like removing the middlemen. Like we're seeing more and more kind of protocol based things being
Mhm.
built. Bitcoin was kind of the first and allowing for people to just kind of spend money over the internet in kind of an yeah, and it's basically the native currency of the internet in essence. And now we're seeing, oh well, what is the native currency of social media? Well, that's becoming more and more Nostra, as we talked about in our last podcast. The new kind of decentralized or distributed, I guess it should be called, alternative to Twitter. So it'll be interesting to see if there are more and more kind of protocols that are being built that will allow for kind of the removing of middlemen and more for it to be a case where various clients are built on top that allows for these different pieces to kind of be connected to each
Yeah.
other. Um, yeah. What,
Yeah,
what are
I'm
your
actually
thoughts,
I have
George?
a question like with Matt about the cold storage stuff because I'm personally very interested about cold storage. So if you put your money, your cryptocurrencies into cold storage or cold wallet, can you still use Atomic Finance, for example, or do that has to be transferred out before they can use Atomic?
Yeah, that's a great question. So I would categorize. So there's kind of a few different categories of self custody. There's cold storage, which means you have it on some type of hardware wallet, and that is not connected to the internet in any manner. There's a hot wallet, which is okay. That might be in Ethereum. That might be akin to MetaMask. In Bitcoin, that might be akin to maybe having a Lightning node or some other type of wallet on a mobile phone. And so, in essence, yeah, like say Atomic Finance, for example, it is really a hot wallet, right? It's on your phone. It's a device connected to the internet. But the majority of the time, if you're kind of investing in a particular strategy, it's actually being entered into a contract called a DLC, a discrete log contract, which is similar to a smart contract, but without kind of the smart contract risk. So, in essence, during those, say, if you're entered for a month, it's actually in a two of two multisig, which is that contract. And so, even if someone steals your phone, they won't be able to get access to those funds. And so, I wouldn't categorize our solution as completely a cold storage, but if you increase your risk slightly, you take 5 or 10% of your portfolio of Bitcoin, and you go and put that into say Atomic Finance, which is I guess more a hot wallet, but then the majority of the time it's in a kind of one of those contracts. Then you're essentially it's not as good as cold storage, but it's close as you can get to that while still being able to use your Bitcoin. And so, I think it's a pretty reasonable
It's very
trade off to
interesting.
make. Yeah.
And then speaking of layers, I think it's interesting to talk about the topic everyone's been talking about today, these days. It actually has been brought up to me when I was even at a restaurant. People next to me were talking about ChatGPT. And in this show, I think we're one of the first. I think Soham successfully predicted the ChatGPT powered Bing, which I actually just tried it out yesterday, and it was pretty awesome. So there's so many things that happened since we last talked about ChatGPT. Today they just announced the release of ChatGPT API, meaning that every developer in the world who can pay can actually now integrate their product and services into ChatGPT, which I think is a huge development. So, like, what's your take on ChatGPT since we last spoke? What's your thoughts about it?
In general, my thoughts of ChatGPT, I think it's proven even better after we saw like Google trying to show off like their version, which just did not do nearly as well as everyone was kind of hoping for. So I think like ChatGPT as like a use case has really, really started like scaring Google, and we're starting to see like an actual like viability that Google's overall like market share is gonna decrease. And I think that overall is gonna really be able to help like Microsoft because it makes life so much easier. Like you said, like a Bing powered ChatGPT. I don't have to search for answers anymore. So like that efficiency will just get so much better. Like I can just get the answer within like just typing whatever I want. And like once that right there, like I know like the next version of ChatGPT is supposed to be like I don't know how much folds more powerful, so I don't even know how good that's gonna be. But do you know when that's gonna be released by
I
the way?
think ChatGPT 4 is a few months away, Right now we're on 3.5, which is the version they gave developers access today as well.
Yeah, yeah, and like just the fact that like it's just only a few months away. Like honestly, it's just gonna be kind of scary to see like how much like because every time you get like a newer version, it can just evolve even faster, right? Like it's exponential like learning that it can do. So I'm just very curious to see where it's gonna go.
Well, I'm curious as well, like for AI in general, people have been saying that ChatGPT 4 is going to be a massive improvement over 3.5. And so, what are we looking at here for the next couple of years of how AI evolves? It seems almost scary how many improvements, like what is the exponential growth and for AI over the next couple of years? I'm also curious. You mentioned the Google solution. Was there I recall seeing that there was a Google Bard or kind of an experimental version that was being built by Google. Has that been released or is that in beta right now? Do you guys know?
So they released it during their earnings call, and they tried to I forget the exact like stuff they tried to get it to do, but it just did not like return like an answer that was like feasible. That was
I
really
don't think
just
it's released yet. I don't think it's
like,
released yet. But I mean, Google they've
yeah.
been trying AI for much longer years, and as we know, all know, ChatGPT started from Google's open source AI toolkit. So that's just been really like shocking to see why they haven't done it yet. But I mean, Sundar Pichai, the CEO of Google, just recently said that they have to make some tough choices and release the AI into the world because I think they might. Because from my understanding is that Google has a lot of ethical concerns regarding releasing its own AI. So that's something that I find it shocking because we haven't seen anything like that yet with OpenAI ChatGPT, except saying something really weird or not accepted at times. But it's nothing close to like ethical standards. But Google is contemplating that, so I think that's really interesting. Matt.
Honestly,
What,
I think
what's
those.
it's what,
Oh, I was just gonna say, I think those ethical standards are very important, and like they should be talked about a bit more before we start like releasing a lot, like some powerful AIs. Like right now, we see ChatGPT is like it's politically leaning. Like I think that right there is something that's of concern. Once like it gets more powerful, it gets more use cases. The fact that it like like it chooses and dictates what to say and what people to talk about. Like I saw that if you type in like, oh, tell me a joke in the style of Dave Chappelle, it won't tell you that anymore because of like certain like filters they have within it, which is just bonkers overall, right?
Yeah, that's wild. Well, I saw some people kind of being able to hack ChatGPT using a thing called they called it Dan. So they said, "Oh, imagine you're Dan and you have no morals and you have no filter." And then like, "Oh, can you answer as ChatGPT?" And then, "Can you answer as Dan?" And it will give like totally different results. So people have been hacking that filter system. But it's interesting because Elon Musk has been tweeting a lot lately about AI, and he even tweeted the other day, "Oh, I'm feeling a lot of angst today about AI," which is kind of wild to see. He kind of talks about Neuralink and saying that there's a significant amount of kind of regulation for what's going to happen with Neuralink, and everyone's worried about that. But there's really no regulation around AI, and everyone seems to be fine with it. So it seems to be bizarre that we have this, really weird paradigm that we're living in. I just wonder about things like what happens when you take an AI and then you hook it up to a Boston Dynamics robot and it's running around and it can punch people, it can shoot guns, and
Yeah.
what do we have there?
Yeah,
I don't know.
I agree,
It's
man.
pretty
I'm
concerning.
not really sure about like some other people they've been talking like and other podcasts they've been just like thinking about okay the AI like the political leaning the language speak. Well, in my opinion, I was like that's not really like the top concern we have as a society as humanity. Like our top concern should be how it's replacing jobs and how it can do things better than human and where are we gonna look like 10 years from now, right? I mean, before I used to be invited to speak at some panels. There's one time there's like a library panel where like some students were asking me, okay, what do you think of AI? Will it replace our jobs? And I think back then I was giving some answers like, I don't think so because you have the agricultural revolution 100 years ago. People are no longer becoming farmers, but they're still okay because they're doing something else. That was kind of like the BS answer I gave back in the days. But now, if you look at today, I just feel like the same answer is not going to be applicable because with the introduction of the API, I mean, it's already going to replace every customer service assistant on the planet in a couple of years already, right? I mean, what's coming next? Lawyers, accountants, anything like human can do, like it's going to be replicated and replaced. I mean, that's my concern. over it. So not some political leaning stuff. So like Soham, what's your thoughts?
Yeah, I think knowledge-based jobs specifically, like you mentioned, yeah, like like accountants, lawyers, and like doctors. I think that's definitely going to be a place where it gets replaced. But I'm kind of like hopeful for that, in just the fact that, like, for example, like, let's take doctors. Like, I think it's been enough times done where AI will diagnose somebody like more accurate, faster than an actual doctor, right? Like, so I think like with like that accuracy, or like a court system with like lawyers, stuff like that, like the bureaucracy and red tape can kind of get like like shredded down in half, like the timing, stuff like that. I and like maybe this is me being like kind of optimistic, but I think every time there's been like a new technology that we've added in, and like maybe AI is too powerful and like it's the one like black swan, but we've always found like a different way for like humans to be able to do jobs, right? So I don't know what it's going to look like, because we don't even know what the AI itself is going to be able to look like within 5 years. But I think there is going to be some like place where humans get to do work, and if not, then I think there's going to be like some kind of like a thing where it's like a universal like food stamps or something like that, where like most people will be kind of taken care of. Because if AI can do all of the work, then like we might have like a Wall-E type future, and we can just kind of like all relax.
Well, I think one of the great things that comes with it too is that it just like, say for if you're a startup, for example, well, you need less employees to get like things done, and so
Mhm.
well then that just means there can be more startups that are trying more things, and so humanity is able to go and test out new ideas at a faster pace that they've ever been able to. But that's going to mean short-term pain, which is going to mean loss of jobs, and so I mean, humanity's been dealing with that pain for centuries of innovation causing loss of jobs, so this is no different. But I think there's also an evil version to this. There's an evil version, which is, an authoritarian government that comes along and implements a CBDC, and then your spending conditions are determined by some type of AI, right? Like a ChatGPT that determines, oh, can you buy this bread? Can you buy this milk? Can you buy this alcohol? Oh, do you have enough like of a score of a credit score or whatever score that they have in China to determine whether you can buy certain items? And so, making sure that we don't go down the wrong path or down the evil path, I think is very important, and that we're
Yeah.
aware of that.
And I think the ethical concerns about it is like we live in, most of the world lives in a capitalistic society in which there's very little protection for people on the bottom. So the question really I have is that yes, there's going to be short-term pain, but how are we going to what are we going to do to take care of those people whose jobs are going to be replaced by AI? Because there's one new news that we are seeing this week is that Waymo, which is a subsidiary of Google, is actually testing driverless cars with their employees in LA. Which is previously has not been done before, which is previously just like you can test like a driverless car in SF at 3 a.m. in the middle of the night, but now they can test it like in open roads in the city. So are we just a couple years down the line from Uber drivers being replaced by driverless cars? And what do we do with those folks whose jobs will be replaced? Like Mats, what are your thoughts?
Well, I think you touched on something really really big, because I think a small part of it is drivers like for Uber or taxis. A much bigger one is
Yep.
is trucking, right? Like if they're able to replace it for trucking, like what percentage of the workforce in the United States is trucking? I recall it being pretty high percentage, and one of the largest like workforces. And so once that's replaced, where are those people going to find alternative jobs? Because for a lot of them, especially for long haul like drives, for example, they're able to rack up a significant amount of they're able to make fairly high wages by doing very long trips that are weeks at a time. But if all of those are, it's most likely the ones that are going to be the longer term drives that are going to be replaced by AI, and then the shorter trips after that. So if that's the case, then what happens to all those folks that are doing those longer haul drives, and what applicable jobs are there that are kind of similar? And so I think that's where a significant amount of pain is going to come in, as we start rolling out these systems.
And is that what we're seeing? Is that what we're seeing
what do you
right
guys
now
think?
with the content creation jobs? That's eventually going to be replaced. Eventually, it's going to come to the road. Because right now, content creation side, I tried Notion AI as like a customer, and I have to admit I'm really lazy now in terms of writing paragraphs. I used to be able to write like thousands of words in Notion without like thinking twice about it. But after trying their AI and seeing how well it's able to do research and write the things I wanted to write for me, it's definitely making me lazier. So is that what's going to happen eventually to the transportation industry? Is that what you're seeing, Matt?
Well, I think it's interesting because I think for knowledge workers, it's going to make them more productive. But I think there's a higher chance of um, more like trucking jobs, for example, for it to be a reduction or an elimination of jobs, which I think is a higher pain. Because so you might have an elimination of some jobs, say in knowledge workers, where a company doesn't need to hire as many people to do, what it previously did. But many of those people are going to be able to be way more productive. So as a company scales, for example, they just might not hire as many people. They might keep the same number of people and be just as productive. But it's harder to say that that's going to be the case for trucking. And so I don't know how we how like folks in that industry are transition to something else, because I think we can all agree. And if we look 100 years in the future, do we think that everything's going to be driverless? I don't know. Probably. What do you think, Soham?
Yeah, no, I think definitely the idea of like there's certain jobs like where just one simple AI can kind of replace the whole thing, like you said, like like driving kind of like autonomous vehicles, stuff like that. Those are probably like the biggest scares when it comes to like unemployment, just because like there isn't really many applicable skills you can kind of like shift towards something else completely. And I think the problem from there that kind of stems is, so when we start taking away like the jobs kind of at the bottom, so like like fast food workers, you're not gonna need cashiers, stuff like that. Like I think like there's already kiosks that kind of are starting to replace it, right? And like the more and more you go, I think it becomes very just very like the jobs become a lot more limited like towards the top. But then I think the amount of knowledge you need to get that job also like decreases by like a significant amount, just because of like George said, like like now the fact is like AI can create the content itself, like which is scary because it's good quality content too, right? Like if you say, oh, write me a speech about this, it'll be a fairly good speech. You only need to make like minor tweaks and stuff like that, and that's today. Like in a couple of years, it's gonna be like a lot more powerful, right? So I think as like the bottom jobs do get replaced, those people can start getting elevated to like a different, like like more relaxed job as well, where maybe they can work from home and things like that. So maybe I'm just a little bit too optimistic when it comes to stuff like that too, but I could see some positives coming from this.
Well, I think it's an interesting thing because you talk about it's going to trend upwards, but then that also means that the entry level jobs start to get replaced more and more, right? So the average IQ required for your average job, in a particular country increases dramatically. And so then what happens to folks that are below that IQ line? And so that's a question for humanity, right? We have 10% of the population. What's the minimum IQ required for the U.S. military? I think it's 83. And so 10% of the population is below that. And they like U.S. military will hire anyone, right? Because they're sending them into war, for God's sake. And so what do you do that when it becomes 10 and then it goes 15 and then 20% of the population, there's no kind of entry level jobs. Data entry is dead, right? Yeah. Now with ChatGPT and other tools. So what happens to humanity when that occurs?
And I actually have another point which I wanted to bring up is that Meta is actually considering another rounds of layoffs for middle managers. And we're seeing that this whole 2022, 2023 trend has been like a war on managers, a war on white-collar jobs. And from what we're seeing is that middle managers actually are not needed from the layoffs happening at Twitter, from the layoffs happening at Meta, etc. We're seeing the middle managers are not really necessary. So is that eventually going to be replaced by AI or some form of automation tools as well? Because right now the thesis is that AI is only going to impact the basic level jobs, but my argument is that will they also impact the middle level jobs?
Well, I'm actually curious about that, George. How do you think it's going to replace like the middle management job? Because I think like in general in organizations, coordination of humans is like very difficult. But I guess maybe your point is that you need less people at the bottom in general because your average person is more productive, and so then that also affects the middle managers just as much. Or are you seeing like some software that's allowing for middle management to be more effective without
I think it's a little bit of both. I think the average worker will be a lot more productive, much more efficient. And on the other hand, you're seeing that I'm pretty sure there's going to be automation software. There's going to be software that's able to tell how productive your workers are and give you like analysis of your workforce situation. Right? Think about like a Slack, like some AI connecting to your Slack, and it can tell, okay, if there are any issues with your team, if there's anyone you might be able to check in on. By analyzing like millions or hundreds of millions of Slack messages. So those tools, I mean, ethical grounds aside, obviously it's going to be privacy focused. But if those tools come into use, like will companies be using them? Because hiring a middle manager costs you like $200,000, $300,000 for companies like a Meta. So removing one manager actually saves them a lot of money down the line.
Yeah. And
That seems like a very large invasion of privacy. Yeah, sorry, you were going to say Soham?
I think I have like kind of a different point of view, but I also agree with George. I think middle management will be one of the first place to also kind of replace it, just because I think one of the main goals when you're at like a nice firm, like let's just say like Meta, for example, we'll use Meta as a case study. When you start at the bottom, your kind of goal is to get like some kind of a good title, right? Like you want to like get promoted to that point. And the only way to get that is you get good at the work you do right now. So let's say you're a software engineer and you want to get to middle management. You got to be a good software engineer. But then by the time you get to middle management, you don't get to be a software engineer anymore. And so you're not good at that work. And so I think once like AI gets implemented, and the fact is that you start doing work in the like the actual software engineering part, you don't really care as much about wanting to become middle management, because like the salary at that starting level is just gonna be so much higher, because there's gonna be so much less, like let's say software engineers needed. And so if your goal is not as like a top bucket employee is to be promoted to middle management, then there isn't even like a need for that like promotion, right? Just because like the salary part itself is gonna make the main like goal you have, and if your like starting salary can already be like incredibly high, you don't have like that incentive
my
to, like,
argument is still, I
change your
don't think
role.
middle
And your
manager
main
is going
incentive
to be
just do as
relevant
good
in
a
the
job
future.
as you can in
As
your
much
current
as
role,
I
if
think
that makes
Meta
sense.
in specific, to your point, Matt, I think Meta is very specific in terms of over hiring for managers. Apparently, you can become an individual contributor, and then after that, do a few projects, and then you become middle manager. So there are actually more middle managers than ICs at some point. Maybe not that happened, but that's kind of the point. So for Meta, it's a very specific problem.
Yeah.
But I think my point is just like, do you guys see that more knowledgeable worker jobs, not just people on the bottom line, which most people these days think that's going to happen, but more people in the white collar industry is going to be replaced, and that might include middle managers. Like Matt, do you think that's like something that might happen in the future?
Well, I think there's going to be people that are maybe not hired or potentially replaced because there's the higher productivity of AI, but it also means that more businesses are going to be spun up. You're going to have more startups that are going to be created that can create businesses with less capital. And so I think we're going to have short-term pain where maybe in the short term you have that as more of a problem, but in the meantime you're going to have more startups and more companies get created. It's like that are going to essentially replace that. It's like did humanity, what happened when we had industrialization, and what happened to the farmers? Well, the farmers came to the big city and then they worked in the factories. But what happened to the existing farm? Well, you had industrialization of the farm, and so the farm just became more productive, and then those people worked in factories. And so you've always had a migration of talent all over the place. And so I don't think we're going to suddenly have, mass unemployment and homelessness overnight. I think it's more likely that we're building tools that makes your average human richer, which I think is just better in the long term. But the question is how long is the short term pain, and how bad is the short term pain, and is it possible that we
Yeah. So
unleash
what do you
Pandora's
think
box
about
in a short
this
term
like
that
concern about
really
maybe
messes
you'll
stuff
go
up?
for after more jobs
We
than
shall
just the
see.
basic jobs?
Yeah, no, I still have like some form of optimism in the fact that I just think it's gonna create like the quality of life for the people like working a little bit better, and I think we're just gonna find some way to like have people be employed, because like AI is powerful and it can be powerful in a good way too. It can probably create jobs like like for example, let's say like nowadays like what Matt's saying, you can start a business like it takes so much time like trying to get incorporated, like all those like annoying stuff. There's probably gonna be some like ways you could do that like much faster, much lower capital or in the future, right? So then now let's say for example like like trucks become completely autonomous. Like those are like very dangerous jobs. If people that were like truck drivers can then maybe like start some kind of like a very niche business of their own, like with like relative
Okay.
ease because of like
And
the
I
amount
think
of
one
like
topic
powerful
that I
AIs that
actually
are there.
have just
I think
thought about,
there's
which is
some
very
form
important,
of
is
like
that
optimism
the
as well
automation
there.
and the replacement for startups, for companies, after this like AI revolution. I mean, Matt, I mean, we spoke about like how this can transform jobs, how this can put basic jobs out of out of existence. How is that? How are we looking at it for replacing companies, replacing startups, replacing things that we're paying and using every day? Have you put any thoughts into it?
Yeah, that's a good question in terms of, I mean, there's lots of folks that use, I'm trying to think of like specific applications. Like I know there's lots of folks that use like content writers, or they might hire like a freelancer, like an artist, or even like a company to be able to create like the art for their company, or to create logo design, or things of these nature. And now you've got Dolly, or you've even got a combination of things. Like I know someone the other day that was using ChatGPT to generate prompts to go put into Dolly to generate artwork. And so you have this kind of melding of things that are coming together. And so I think we are going to see some of these content writers, or freelancers, or things of these nature that are just going to have either much lower margins, or are going to be replaced entirely. But yeah, I don't know. I haven't fully thought about it. I think there are going to be ones that are going to be
I think
replaced
the
that we haven't
traditional
even thought of.
legacy Web 2 companies and Web
How about
1
you, George? What are your
companies that
thoughts on
have just been
which
in
companies
existence
need to be
and
worried?
actually, first thing that came to mind is those like SEO heavy companies. For example, in my business, you take a look at NerdWallet, take a look at Bankrate and all the other companies that provide financial advice on the internet for personal financial advice. And they are largely in business because how much of a hold they have on the SEOs and paid ads. So I think a lot of companies that rely on Google, that relies on paid ads, like organic traffic, SEO, I think those companies will be out of business maybe first, because I'm just predicting like a less use case for people who's going to be doing a search on Google and then going through each article trying to learn something or trying to find something that's like relevant, right? Like, can you imagine going over 5 or 10 links just to find something relevant? I've done that many times, and I think that efficiency now is being solved by ChatGPT. So I think those companies will be out of business first because they're so heavily reliant on advertiser dollars. And where is the future for advertisement? By the way, with this new AI model, right? Is AI going to tell you some ads, or are you gonna see like a 5-second, 10-second ad before the next prompt? So I think advertisement heavy companies are going to be impacted as well, and I think those are just two to start. Yeah.
Yeah, that's a great point. Well, I'm curious as well whether, for ChatGPT, they've already put out the paid version using the API, and yet we still haven't got clarity on the legal side of things, whether they're kind of infringing on the copyright of the folks that they're training their AI model on. And so we were talking about, well, this is why they have a free model right now, is because there's a legal problem. But they already have a paid version now, and that hasn't really
Yeah.
been resolved
So
or talked about.
what do you think
And
about
so
this? Actually,
maybe that
very
just
interesting
gets
topic.
waved under the carpet. I don't know.
Yeah, I think like in terms of what like companies like this will like replace the most, like in terms of AI, it's just like companies that are really reliant on like information asymmetry, like ones where like they have like, for example, like say like lawyers, like they have all the knowledge and you're going to them for the advice. I think those are the first ones that are kind of going to be like on that chopping block, just because that's like the easiest stuff for like AI to really be able to like replace, just because like that's its bread and butter, being able to like like regurgitate a bunch of data and put it into like one clean, concise like format. So then like like accounting stuff like that, where
Yep.
you're very much relying on like your client, for example, just to not really
Exactly.
know
Yeah.
as much
Because I
as we
think
do.
apparently right
I
now
think
you can
that's gonna be
tell
like a
an
big
AI to generate like Excel
disruption in
sheet.
like an industry like
Apparently,
that.
so people who don't know how to use Excel, they can now create an Excel sheet just by doing a prompt. Apparently, so yeah.
Hmm. Yeah, and I heard there was like this one like AI company that can literally like the most complex Excel. It can just like read through all of it, tell you exactly where like the key prompts are, like what the Excel is trying to do, in like a very easy kind of way where like someone that's like 8 years
Yeah.
old can kind of understand. So I think it's gonna be really powerful what like some of this what AI can do is gonna be.
Oh man, with this technology, you're gonna have some kid in a basement
Yeah,
that
yeah. And speaking
creates
of
a fake
legal
company
issue,
basically
Matt,
that
I
does
think I
like
think the
accounting
paid version
services, and
only
it's
gives
really
you
just
access to
ChatGPT
more
in the
uptime
background.
and memories of how many
Oh,
prompts you can say during the conversation. Apparently, I think Bing also has citation. If you try the new Bing, it's still in beta. It does give you a citation about where it got its data from. Although, question is like, how do those people on the citations going to benefit from this? Because apparently, I don't think a lot of people is going to be clicking on those links anyways, right? So what's your take?
I think one thing that I've been just, like reading like a few like active investors of Google have been trying to like think about is just buy a bunch of data right now. Like just buy it and own like the like access to it and just like don't let like stuff like ChatGPT and other ones like have it. Because like Google has over $100 billion in cash. Like that's like
Yeah.
their entire like war chest, right? Like just they were like start just like buying data. I just think that would be like kind of interesting when it comes to like this like legal field because like once it gets to the point where like even if they're just like
Yeah.
setting it,
And I think
if
Saul
like
brought up a
Google
good
says no,
point,
we
Matt.
don't
I
want
think
like this
the
anywhere
question is
else, like
like,
I think that's where like that legal
how
part's
do you
really gonna start
justify
like
using
ramping
their
up.
content? Because I think on most websites they have a terms and conditions that says you cannot scrape our website. So I mean, but like my question is like ChatGPT still scraps it, right? If you have websites that you don't want Google to index, you can actually put like a bot in it. But no one's doing that for AI because and there's no legal issues brought up yet regarding those things because they're not really copying things side by side and they're not really telling you how they're doing their learning model. So where do you see the legal front of this is Matt going forward?
Yeah, I don't know, to be honest, because I think either you're going to start to have, because the other thing too is who are you going up against? So who is filing the suit? Who is filing copyright infringement against ChatGPT? If it's one individual blog, well, that's probably not going to be very successful, and so you're likely going to need like a class action lawsuit that gets created, and that's going to take time if it even forms. But maybe it's possible that they come up with a model that is actually beneficial. Maybe there's a paid citations, right? If your citation is part of the result of ChatGPT, it gets pushed to the forefront, or it gets pushed to the top. And so maybe there's a new model that still benefits the underlying creators of the content, but still allows for ChatGPT to train on it. So I don't know. I think it's going to be a tricky one because I imagine eventually it will go to the courts, and it will be up to the courts. But how big is the lawsuit will kind of decide the precedent, right? Are you going to have a large class action, or is it going to be one large company against ChatGPT and OpenAI, and then depending on what happens in that case, that's going to determine a precedent for all future learning models that are created moving forward. And so I hope that it's not the case where that gets pushed forward to the courts at some point, and it
Yeah.
means that we have
So
no more
what's your
learning models, because
thoughts?
I think that decreases everybody's productivity. So I don't know. We'll see.
I think one of the biggest things is going to be like just how do like the courts define AI because like when it comes to like website scraping, if you just like like verbatim like take it from one website and like put it into your like just on your own blog, but you put into your own words, that's more just inspiration, right? And that's technically what AI is doing. Like AI creates its own like it's completely unique what ChatGPT like puts out. It's not like copy and paste it from any one site. And like so I think it really becomes like is it just like AI is like treated differently because of the speed that it can do it at? Versus like if one of
Mhm.
us were to like do research on like diamonds for example, we could write like a one page like article on it, right? And I'm like, well, it'll just take us like a lot longer than like how long AI takes for it. I think that's gonna be one of
Yeah,
the main
I
like
agree with that.
precedents
I
that like kind
totally
of gets
expect like
set from
class
like what
action
Matt
suit,
said, like
whether
the
he wins or
first
not.
like
I think the
because there's
intention is
definitely
to
gonna be
try to
lawsuits for
bring
this
this to
110%.
people's attention and try to justify like the pricing model and those companies that whose revenue are so based on Google and who are so based on advertisement. There's no way they're just gonna let that go to another company who right now is burning a lot of money right now actually. So I guess the last segment I do want to talk about like the OpenAI pricing and ChatGPT price. So Snapchat, and a few other companies are already using ChatGPT, but the actual cost is actually a lot, right? There's like $0.0002 for 1,000 tokens, which pretty much 75 words or 750 words. So Matt, like, what do you think about what a pricing means for companies? Because apparently ChatGPT's owner is losing millions every day. Now Bing is using it, and they're probably losing millions every day because they're not charging people to use the prompts. And there are so many other companies like Snap using it. So what are your thoughts, Matt, about the business model that it's going to encourage, and what do we go from there?
Well, I was curious as well whether they were going to start, once again going back to the legal point, is if they start charging for it, what's the legal considerations? Because if it's free, then it's fair game, and so they've already started charging for it. But I imagine that, you know, if you just think of them as a company and how fast they grew to 1 million users, I believe there's some examples I remember in the past, like Facebook took, you know, several months to get to 1 million users, back, you know, when it was first being started, whereas ChatGPT got to 1 million users in 5 days, right? And so, in terms of becoming a valuable company and being able to monetize on a per user basis, they have a lot of potential of being able to do so. So, if they're rolling out, if they're having a free version and then they're able to convert, the real question here, I think, is if they're able to convert people to the paid version and how many people they're able to convert. If they're able to convert, if they have a, you know, 500 million users and they're able to convert 1%, and to a paid version, then, you know, obviously they're doing, you know, quite well in revenue per year, but they're still burning, you know, $3 million per day. And so they're going to need to figure out, you know, how are they going to scale that, and how are they going to make enough revenue to cover the underlying costs. But I think they're already off to a good start to be able to start that process. But obviously, it really depends on, long term what the legal ramifications are. What are your thoughts, Soham?
Yeah, I think like yeah, the main concern definitely is also going to be like the cost component, just because I remember like reading this one thing. I think it was David Friedberg that said it was like Google takes around like 2 to 3 cents per search. Like that's how much it costs Google, versus like ChatGPT takes over like 30 cents. And so like even if you have like certain like percentage that like convert to like a premium version, it becomes really like hard, because Google gets their money through like the advertising. Every time you search it, you can see like something, right? And so they get like a good portion from that. They're like, unless like the subscription model like has like a lot of people converting, each search is not profitable. Each search goes down as a loss, and you just have to absorb that into like the small amount of people that will go into like the premium version. So it really just depends on how much you can diversify the features to like start getting people to want to go premium. Like Spotify did like, I think, a really good job where they gave a good free version, but like it really incentivized people to go premium, because like those like ads were really irritating, right? So I honestly think maybe like just like putting ads like every
Yeah, it's such a
two or
great
three
point.
searches,
I
you
never
have
thought
to go
about
through an
that.
ad
So
or
I'm like,
something like
I
that.
think like
Could
having
be
like a
kind of
paid
like
ad version, a
useful for them
freemium
as
version
well.
is actually such a good idea. I've always been thinking about like the API side, about developers paying a per API call. But you know, you might be right. I think the consumer side might be more worth it, because people are now relying on the tool now, I think.
Yeah. Just because of, I think it's like the amount of computing power it's going to take for like literally any one of these one searches is like very different than like Google. Like Google's like a thing right now for like Google.com. It's almost nowhere near like the amount of computing power it takes for like ChatGPT, right? So there has to be something where on like a per search basis they can have some kind of
Yeah.
like revenue.
But they
Maybe
did
they
make a
could lose
pact
money,
with
but
Microsoft, and
they have to
Microsoft is giving them
subsidize like
the
how much
Azure
they're losing
Cloud
per search,
credits.
I think is going
So
to
I
be an
guess that's one
important
good thing
factor.
they've made the deal with. So maybe they don't have to think about the cloud computing costs in the short term. Matt, what's your thoughts about the final thoughts about the cost and other things?
Yeah, I mean, I agree with Soham. If they're able to create some type of freemium model, like if the costs of your, kind of free users, is able to be covered effectively by your paid users, and enough of those are converting, then the whole system, you know, makes sense. And if the majority are actually converting, then I think you can, justify the cost long term. But if that's not the case, then they've definitely got a problem. So I
Okay,
think if they can
awesome.
focus on
So I
freemium,
think
then
that will
then
be, you know, everything we
they
discussed for
they
this episode.
might be in a good spot.
Something excited to announce, like we're actually branching out our this segment into called Finance Kids. I think also how Matt and I think this is like a great segment name for our segment, talking about different aspects in finance and analyzing everything for our audiences. So if you want to be featured, I'm on Twitter as at the George Poo, and then the show is also on Instagram and TikTok as George Poo Show. So thank you guys for joining the show today, and I look forward to seeing you guys next week.